Hi, everyone. It's Thursday, April 20th, 2023. Welcome to TechTO Quick Takes. I'm your host, Alex Reilly, and here are today's headlines. The new Canadian Consolidators Club expands. Autoleap benefits from changing trends and raises 30 million US. A clean raise of 20 million US for Optable. Aspect Biosystems shows how to spin technology out of Canadian universities. And for our lightning round, we review more raises, announcements, and acquisitions that have been making headlines over the last few weeks. And to help me break it down, Alex Norman joins me. Hi.
Hey, Alex, we keep on seeing momentum
Yeah.
with
Yeah.
news. One thing that's interesting is that we're seeing less and less disclosed when news is coming out, so
Mhm.
making it more interesting to do our analysis.
Exactly. And I think it's nice too that we're able to give sort of our opinion on it more so because you're right. There's not a ton around some of these headlines of what's announced, but great to see that there's a lot to talk about and things are really picking up across the ecosystem. Just given that we have a lot to talk about today. So the first headline I want to get into is the Canadian Consolidators Club is expanding, and by that, we're referring to the MyoVision raise, 150 million US to kind of join this new Consolidators Club. So, what's the news? And I know you're also doing a bit of a combination of stories as well, which you love
Well,
to do. So, let's
it's
get to it.
it's I don't know. You can look at it two different pieces of news or one piece of news, but
Mhm.
MyoVision announced earlier this week, that they are acquiring Global Traffic Technologies for 107 million US. And the Kitchener-based company also announced simultaneously that they raised 150 million US dollars, in part to pay for this acquisition and part to provide a secondary to early investors.
And I don't believe this is the first acquisition by them. I believe that there was another one too, correct?
Yeah, they've done three in the past. I think we may have talked some before in previous
Mhm.
quick takes. They've acquired Microtraffic, Rapid Flow, and TrafOp. What's interesting is they're trying to reposition, like they're in the smart cities,
Okay.
especially in let's say the
Yep.
movement of traffic and people and the vehicles,
Mhm.
and they're trying to build a platform. And so, but this deal feels different for you for a few reasons.
Okay.
You look at it, it's an acquisition that's pretty large along several metrics. Prior to this round, the company had raised a total of 138 million dollars. The revenue for Global Traffic Technologies was 40 million USD last year versus 80 million for MyoVision. So, first thing, the price is relatively like 80% of what they've raised
Right.
previously to this round. The revenue is about equivalent to 50%, and Global Traffic Technologies has 90,000 intersections from 3,100 cities, while Mile Vision serves 10,000 intersections from 450 cities. So uh, GTT had a significantly larger customer base.
Yeah, so I was gonna say, like, a bit of a difference in those numbers. So, what's the rationale then, I guess, for
Well,
the acquisition?
look, we said Mile Vision wants to be a platform for smart cities. It's stated in some articles that it wants its revenue to get to $200 million
Mhm.
annually, and wants to go public when markets improve. So this acquisition is helping it in a couple ways. First, distribution. MyoVision now has relationships with at least 2,600 cities that did not have before, so it can now go sell its other products to expand the share of wallet. Then it has product breadth. Obviously, this GTT product seems to be well liked, and they can go sell to the current installed base. So distribution, product breadth should
Mhm.
both lead to growth and synergies. What's not talked about here is cost savings or pulling cost out. This is a pure growth strategy.
And from what we do know, can you just share, how did this deal come together? How did they manage to get it done and kind of across the finish line?
So lots of deals we've talked about by the other consolidators feel like companies that had to sell,
Mhm.
that had raised money, and at the point they couldn't raise money more, or just their strategic options were limited. What's interesting here is um, GTT was owned by Danaher Corp, which is a publicly listed U.S. company that's grown via acquisitions. They bought this company in
Mhm.
2016 from a PE firm. So whatever reason, Danaher decided let's divest of this, and they ran a proper sales process, and MyoVision won that. So to win a process like this means you have to usually pay near the top and have a clean offer. right? No contingencies, preferably cash, especially when you're talking about a private shares. So my guess, Myovision was one of the top bidders,
Mm-hmm.
and they could pay the most because this was most strategically creative, uh, from a potential growth perspective, from a potential multiple perspective, and they had to raise the money to pay cash because my guess is Danner didn't want private stock. So like, you look, they paid roughly 2.7 times revenue.
Okay. And I mean, it might be difficult for you to answer. It might just be speculation, but do you think this is why they needed
Yeah.
to raise the money? Yeah.
Yeah, like I think they wanted to make a clean offer. They didn't
Mm-hmm.
want to deplete their cash. Even I don't know if their Myovision was cash flow positive. This acquisition was cash flow positive. Like, but I don't know what their balance sheet looked like,
Mm-hmm.
but this was completely fine. This was completely financed by the round they did.
Got it. And who were the investors, if you do
Well,
know?
yeah, well, that again, three Canadian institutions: John Ruffalo's
Mm-hmm.
Mavericks Private Equity, a newer PE firm that John Ruffalo is well known to the community. Telus Ventures team, again, another known entity, and Expert Development Canada. What's interesting is we're seeing Expert Development Canada appear more and more financings over the last 12 months, and they seem to be quite active.
And again, you can answer this as best you can and just offer your opinion. Is there signs that there was a valuation arbitrage with this?
Yes. So I'd say yes,
Okay.
a strong yes. Sorry, strong maybe. I'm pretty confident it's a yes. Again,
Okay.
we know they raised 125 million in primary, so this means there was 125 went to the company, 25 went to earlier investors. So that 125, again, we don't know what the dilution was, but typically, and it might be more private equity, but typically if it's a
Mhm.
VC round, the company's selling 20%, which would mean the company's worth $500 million. If you look at that, if you look at the combined revenue of the two entities, they're valuing the company at 4.2 revenue multiple, and they
Okay.
paid 2.7. So that means, hey, if these assumptions are true, just by buying this company, the Myovision added $60 million in valuation. Now, maybe they gave up 35%. Maybe they sold it, sold equity at 2.7 times. Then there isn't. But like, my guess is there was some valuation arbitration here.
Okay. So again, kind of like in quotes, a maybe for
Yeah,
that question. Okay.
a strong maybe.
A strong maybe. Okay. And just lastly, before we move on, just your final takeaways. And again, with these new consolidators emerging, what do you think this means for everyone?
This has started to change the Canadian landscape. I think historically we had one or two sort of bellwether publicly traded companies that everyone talked about. They may do some acquisitions, but what you have now is a bunch of more late stage or scale ups
Mm-hmm.
that are busy acquiring companies globally, and I think they'll help shape the tech ecosystem and how we operate going forward. And I think it's the great thing is it's not one company, it's not five companies, it's probably 10 to 20 and more as we see more success. I think success takes a long time. Myovision is 15 years old, but it seems to be now using acquisitions to scale faster. Uh, Likewise, trends come and go, but if there's a real problem and you solve it, you can build a business and raise money in all markets. Um, and finally, like, what's to say about market multiples? 2021 SaaS businesses were at 20, 30, 40 times revenue. Here's a company that seems to have solid margins, seems to have maybe not the fastest growth, but still growth. They're going from 80 to 200 million revenue and trading at 5 times revenue. So I think this is 5 to 10 is the new 20 to 40.
And just like on relation to everything that we've talked about, I believe there's a Myovision City Hall product demo that we have that's
Yeah.
useful for us to share. So if anyone is just curious too as to how the product works and to go into more detail on what you had already shared, Alex, I'll link that in tomorrow's newsletter.
Yeah. And I think in the show notes for the podcast, we should also have,
Yes.
like, we've had both John Ruffalo who's one of the investors,
Mm-hmm.
and Chris McBride, the founder of Myovision, present at events in the past. It'd be great to have this link to those videos.
Yeah, absolutely. I love that we can tie in a little bit further context too that we might not be able to talk about when we mention these headlines. So that's a great call it as well. On the note of the newsletter, if you don't already subscribe and would like to, techto.org/newsletter. It's just a great resource for anyone that's maybe looking for something different in terms of content or awareness around what's happening in the ecosystem, up and coming founders, longtime founders who have been doing this for a really long time and have grown their businesses to, large successful companies, sort of the process of how they got there. Anything you want to highlight about that, Alex?
No, I think there's, probably we have probably too much to read and content in our newsletter. So, but it's a great way if you miss some of our podcasts to
Yep.
see the takeaways. And I think we've been dropping founder journeys every week. And there's, I don't know whose this week is, but or next week's is, but you should look forward
Yeah.
because I've been just thrilled with the recordings we've done recently.
Yeah, we're always dropping new content every single week. So Fridays are the days that you can expect to see that. So next, Autoleap benefits from changing trends, and they were able to raise 30 million US. What is the news? A two-parter question for you. What is the news, and also what enabled them to be able to raise?
So Autoleap raised 30 million USD, led by Advanced Venture Partners, who doesn't write many checks. They write about 3 a year, with participation from Bain Capital, Threshold, and Maple VC. Let's talk about, we talk about why companies can raise. And lots of time we're talking about early stage companies. We haven't, we're starting to see more and more late rounds happen. Today this is a $30 million round. And I think, early stage, it's all about team and market. Series B and later, it's about growth, customer value, and ability to continue growth. Autoleap has exhibited all three. The company has grown 10x customer-wise and revenue in a similar fashion since the last round, which I think was about 24 months ago. Customer value, the company claims auto repair shops drive 30% more revenue growth and save 50% of administration time by using the software. That's pretty strong. And tailwinds, so this is future growth. 90%, 90% of auto repair shops use old dated technology. So there's a belief that there's a lot to still penetrate. And cars generally are staying on the road longer, meaning that not only do not all auto repair shops need new technology, but they're probably having more demand from their customers. And when there's more demand, they're more likely to invest in their business.
Perfect. So 3 vital components that helps them to raise. Was there anything else that you want to call out that might have helped them achieve this as well?
The reputation of the founding team. They've previously purchased and scaled a vertical SaaS business and had an exit, which made a lot of people money.
Got it. Okay. So yeah, 4 great call outs for that. And lastly, just any additional takeaways or the value that someone could find in this headline specifically?
Well, vertical SaaS seems, people said it's cooled off, but for, let's call it, unsexy industries or businesses, there's still a lot of opportunity. Our listeners, we live in a bubble where we're pretty tech enabled. We have the latest technology. There's many industries, from hauling garbage to auto repair to lots of healthcare, that are still using pen and paper and Excel, and there's opportunities to build massive businesses. Series Bs are happening again.
Okay.
But they're now being treated like Series Bs did in the past, like pre-2021. And so what that means is you're going to see the reasons the deals get done change. In 2021, I have a feeling a lot of later stage deals were done pre-product market fit. Now you have these qualifications we talked about to get a round done. And I think these companies having maybe a bit lower valuation, but more real businesses are going to have much more staying power and continue to increase in value. So I think you've had a bit of a reset. There's a bit of doom and gloom, and it feels like there's a tech recession, but the resets help the ecosystem grow better and stronger over time.
It's not all doom and gloom. You're saying things are starting to turn around a little bit, is what you're referring to. So that's an optimistic note to leave it on. I want to talk about the news out of Montreal. So Optable, a clean raise of 20 million US for them. We'll get into why we emphasize clean in just a second. So what's the news around that? And also what's Optable for those that might not know?
So they raised $20 million round USD. Long list investors, including Hearst Ventures, Brightspark, Desjardins Capital, Deloitte Ventures, and Aster X. They offer data collaboration and a clean room technology.
So I want to go in on just the clean room platform and what that means. I know the term what it means to have a clean room, but I've never heard of a clean room platform. So what is that?
So I'm curious, what do you think a clean room is? Like historically, like imagine, I would like
Mhm.
to hear what you think of when you hear a clean room.
Uh, I mean, like in terms of actually having a clean room or the
Yeah,
technology. So, I mean, no clutter, easy to find everything. I guess a feeling of it just being tidy and like everything in its place.
yeah,
That's how I would associate, I guess, a
cool.
clean
So,
room.
so that's directionally right. So I'll give you.
Mhm.
Let's go a bit deeper here. So this we're
Okay.
talking particularly here in marketing clean room. It's a place where it's a secure data environment where two parties can share and analyze sensitive data without revealing any personally identifiable information about their customers. This
Mhm.
term clean room comes from the technology or hardware industry, where it refers to a physically controlled environment where computer hardware is assembled without the risk of contamination. So
There you
I
go.
don't know.
It's-
I don't know if you can think of Intel. They had those commercials with the guys in the look like the hazmat outfits that they were working
Yep.
in clean rooms, right? So,
Yeah.
but what we mean here, just to go a bit deeper, is it's a virtual environment that allows advertisers to share their first party data with third party vendors without
Mhm.
violating data privacy regulations. They use advanced encryption techniques to anonymize the data. Neither
Mhm.
party has access to the other's personal information, and it lets them perform joint analysis to gain insights into respective audience and improve their advertising strategies. For example, with a data provider to better understand the interests and behaviors of its target audience, then the data provider can use information to identify lookalike audiences that the advertiser can target with its ads.
Okay. So kind of what I was envisioning in terms of what I thought it meant to have a clean
Yeah,
room. So you kind of used all the right words, like without risk of contamination, it's a virtual environment that's obviously, clean, allowing for data to be shared in a way that ensures it's protected. So it makes a lot of sense. A question, and I guess like a thing we like to talk about on the show is trends and if that has anything to do with driving news like this. So,
yeah.
what are the trends driving this? Why are they
So
driving this? That kind of thing.
I think the first one is new regulation that everyone knows about, GDPR,
Mhm.
California regulations, which is making it harder and harder for people to share personal information about their customers. And then there's
Mhm.
a crackdown by Apple that made sharing third party information harder. So, like,
Mhm.
second thing is everyone seems to be adding advertising to their products to because it's advertising is higher margin. So, a few years ago, we all know about Amazon's business, but you've got Walmart, you've got Uber, you've got
Mhm.
Instacart, you got Netflix all adding advertising. So advertising is becoming a lot more predominant in people's business models. And then publishers and marketers have got a lot more information about their customers. So it's easier to create those lookalike audiences by sharing information.
Mhm. And I know that data protection is just always going to be top of mind for a lot of people. So it would make sense that those are, some of the trends and where we see this going long term. Is there anything else that you want to highlight that's particularly interesting about this round?
Well, I think there's two things about the
Mhm.
financing. It seems like a bit of a party round. The company declined to name who the lead investor was, and that's just odd to me. I'm not
Yeah,
sure what's going
it
on
is.
there.
Yep.
And the other aspect is, that I found interesting is Hertz Ventures is investing in. Hertz is one of the older, better established corporate venture capital arms
Mhm.
um, that was created by the Hearst Company. Hearst Company, for people that recognize the name, is a publisher of many traditional media or magazines like Cosmopolitan, Elle, Oda Oprah magazine, Good
Mhm.
Housekeeping. So this is someone that could definitely help with the rollout and understand the need for a clean room, and it's a very strategic investor.
Right. And the company declining to announce who the lead investor was, is that concerning to you, or is it just odd and
No,
different?
it's odd. It may mean that there's no lead investor. I don't know. Without knowing more, I can't really interpret
Yeah.
it. It's just odd.
Okay.
It's not standard.
Got it. Okay. Yeah, and obviously you're just going off of your own opinion and speculation at this point. So, lastly, just takeaways for our community or anything else worth mentioning about this news.
Look, the advertising market is a huge market. It's
Hmm.
undergoing significant changes with new regulations, changes by platforms, new players. You know, when a big industry goes into large changes, the value chain and how value is created changes. So this is where startups can start really have an impact on creating value for customers and capturing value and build something massive. Um, the one difficulty in particular with this market is marketing tech has a bad
Yep.
reputation of creating companies that get traction but don't scale. So
Okay.
lots of investors are scared of investing in it. But like if you can figure out either how to serve all the players in this market and this value chain, there's opportunities here. Or if you can even affect, how market advertising is going to change and use it to change your company's go-to-market strategy or your company's ability to monetize by maybe adding advertising or, there's a lot of opportunity to create a compounding advantage and make money over the long run.
We have a few more things we want to get through just on the show. So the next headline is Aspect Biosystems showing how to spin technology out of Canadian universities. So obviously interested to get into the tie within Canadian universities specifically, but just to start, what's the news and also who's Aspect Biosystems?
So Aspect development deal with Novo Nordisk that could be worth $2.6 billion. They're a Vancouver-based biotech company that was spun out of University of British Columbia, and they 3D print live tissue that could be implemented in humans to cure diabetes and liver ailments.
Incredible. It's just so cool. So what's the connection with UBC? I'm very interested to know that.
So the company was founded in November 2013 through a collaboration between two research groups in engineering and medicine at the University of British Columbia. What's interesting here is 3 of the 4 co-founders were at UBC, 2 were getting a PhD, 1 was a professor, and UBC's entrepreneurship program encouraged them to build a company, which they did. And even the two PhDs still haven't obtained their doctorates.
And I just want to go back to the amount of money. You said it could be worth 2.6 billion or more. So how can this deal generate so much money?
Okay, so, and again, this is according to the Global Mail. Nova is paying Aspect $75 million USD to fund research and development and invest in the company. We don't know how much they're investing in the company. This provides Novo with the license to develop up to 4 products to treat diabetes or obesity or both. Each of these 4 products can pay up to $650 million payments to Aspect. Plus, on top of that, Novo would pay some type of royalty if these products go to market. So you're talking about like a few times, 4 times 650 gets you to 2.4, 2.6 plus the 75 million plus royalties. This could be massive.
Absolutely. And I mean, there's a lot about this that's already so impressive that you just already highlighted. But why else is this really impressive? Why is this just so notable?
Look, Canadian universities are known for great research, but their reputation for translating this research to world-beating companies is not stellar. Aspects would not exist without the cross-disciplinary research, without UBC. The encouragement for UBC to put the entrepreneurship program and to turn the research into business is important. And what's more important, I imagine, is I assume there was a clear tech transfer agreement that enabled the company to get funded and get off the ground. And we don't see this often. I think one thing Stanford has such a reputation in the Valley is they have clear technology transfers and encouragement to get research off the campus into companies. And so if we could do this more across Canada, it'd have a huge impact.
And yeah, I think that's a great point to note as well. And just lastly, is anything else you want to highlight for our listeners or anyone that's watching?
We talked about long time for MyoVision. Deep tech companies need even longer. They have to prove the technology can work. Then they have to find a way to commercialize it. It just takes a long time. Like, we're here with this. We said this started in 2013, 10 years ago, and they're just starting to look at commercializing it. There's still more research. But when they pay off big. We don't talk a lot about deep tech companies on Quick Takes, but Canada has a lot of interesting stuff in this space. And here's another company we had very early on our YouTube channel.
Yeah, and I think in a previous episode, I asked you a question about like just trends that you saw that were going to be really prominent, and I know deep tech was one of those that had come up. So also really cool that we had Aspect with us at a Tech Vancouver event early on. I'll also make sure we include that piece of content and that video in the newsletter and also just in the show notes, because I mean, as you even just alluded to, doing really incredible things with technology that's just going to revolutionize everything within the healthcare space. So pretty awesome to highlight that. Are you ready for the lightning round?
Yeah, and we'll maybe even keep it quicker than normal here. So let's
Sounds good. Okay, we'll blast through this. So a couple things. We'll start with a raise. So what's the first piece of news from Kepler, and then why is it interesting?
Okay. Kepler raised 92 million US. They've now raised 200 million. Look, it's just cool. They're doing space tech. They have a global ambition we like to see in Canada, and they're pre-revenue. This shows what ambition can do, what ambition can let you raise. This is hard tech, and I just love this in all ways. So just wanted to highlight and say congrats to the Kepler team.
Absolutely. And space tech is cool. You are right. So then we have an acquisition. So the Sampler news. So what's the news and why is it interesting?
Sampler, for people that don't know, provides digital sampling platform, acquired beauty industry digital sampling agency, Abeo. So first of all, Mary Xavier is the host of TechTO Retail, CEO of Sampler. She's awesome. This is an example of how you don't have to be a massive company to be a consolidator acquirer. So it's just nice to see that, again, a Canadian company using non-organic growth through acquisition.
And D-Wave, what's the news there? Why is this interesting?
This is a follow-up. We talked about D-Wave having financial difficulties and cash flow problems. Globe Mail reported that they secured $50 million investment from Public Sector Pension Investment Board. Look, this gives them a runway. I don't know how long. Just need to see PSP protect their previous investment. I don't know if that's wise. This will be just one we'll continue to watch. And
then lastly, the Fairly AI news. What's new? Why is it interesting?
Fairly, shout out to founder Fionn, who's a TechTO insider, active member, talking, and she gets a lot of advice, gives lots of advice on how to run a business. She raised $1.7 million for her company, Fairly AI, which is basically trying to keep ensure that AI models are not biased. I think you'll see a lot more here. You may have heard that AI is very hot right now. Having biases in those models is bad news, and Fairly is trying to prevent that. So pretty cool.
It's a great one to end on. And yeah, we love to highlight anything great our insiders are doing. So it's a perfect note to end on. Just before I let you go, lots of events coming up for the TechTO community. We're in Montreal on April 25th. So that's next week. Alex, you will be there. I'm sure you're looking forward to that one.
Yes.
TechTO Together in Toronto at 111 on May 1st, and then Retail TO on May 24th. So it's going to be a busy next few weeks. Anything you're really particularly excited about, Alex, before I let you go?
Well, Montreal should be fun. It's always fun to see what's cooking in that ecosystem. I think we're focusing on founder fuel companies, founder fuel return. So we said, okay, let's get some people to talk about how the impact it's had and how it helps them build a business.
Absolutely. Okay. Well, thanks, Alex. I know we covered a lot today. So thanks for breaking it all down for us. If you liked today's episode, don't forget to like and subscribe wherever you're watching or listening. And we will be back in 2 weeks' time with another episode of TechTO Quick Takes. And until then, we'll see you on the inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea.
So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.